I'm Tracy Reinick, stock strategist at Zacks Investment Research. And as always, I'm deep diving into some of these earnings charts and bringing you the hottest ones of the group because there's 1,500 companies reporting this week and you're not going to be able to look at all of them. So I've picked out 5 stocks that were pandemic winners or were supposed to do really well on the reopen. So I kind of consider them to be post-pandemic winners. But what is happening with those groups of stocks now? Because the reopen's not really going the same way we thought it might go. So let's take a look at some of these pandemic type winners and where they stand now. Should you be diving in? Are they on sale? Let's take a look. So the first one out of the gate is Wingstop, ticker WING. And this has been one of the hottest of the restaurant stocks. Maybe only Chipotle, maybe the only one hotter, but as you can see, it made a new all-time high here again in 2021. But to start the year, this was considered to be maybe one of the pandemic reopening losers. Did have this rare miss here to start the year, and then the shares dipped down thinking like, on the reopen, we don't need Wingstop anymore. I can go to the restaurants. So that was going to hurt their business. But then, surprise, we're still ordering from Wingstop. We still are having it delivered home. So they got their act together with this big beat in the next quarter and then a smaller beat, but still a beat here. Last quarter, shares hit the new high, up 30% year to date. But they're not cheap. Now trading at 110 times forward earnings. And a lot is going on in the restaurant industry in terms of supply issues, even with the wings. Wingstop is now offering thighs. You can get thighs through Wingstop now. And there have been wing shortages and prices are rising. Additionally, we all know the labor shortage issues and that a lot of restaurants are raising wages. So that's pressuring the business and margins. But these companies have been able to push through the price increases. That's all in the mix as well. So a lot going on with Wingstop. But given the chart, I'm not really betting against it here, even at the sky high price of 110 times. So this is definitely one I'm going to be watching. Then let's switch over to Etsy. Remember Etsy? Look at that huge rally in 2020. We were all buying masks and anything else online that we got delivered home. But like Wingstop, there was some trepidation that, hey, fewer masks are being sold, just fewer items in general, so the shares traded down. But like Wingstop, maybe we were wrong, as people have gotten used to buying on Etsy and continue to do so, even if it's not masks. Or maybe if you're like me, you did order some new masks because of the Delta variant outbreak. I know my old masks were getting a little gnarly there, so I did order some new ones. These shares are at new highs, but they're not cheap either, trading at 84 times here. How much are you willing to pay for these Etsy earnings into what everyone has said will be a hot holiday season? Holiday season, big time for Etsy, should be good. But 84 times, I don't know, a little pricey for me. This is definitely one to watch. Then we're going to switch over to Wayfair, also a huge pandemic winner. Look at that rally in 2020. But then shares just kind of stalled out as everybody thought, we bought all of our home goods here. So still the shares kept beating with huge beats, 60% last quarter. But the shares have come down to the lower range of this treading water range here because everyone still, again, assumes, the kids are back in school. You don't need that desk for the home. You already bought it, so you're not buying another one. But all the other furniture companies have already said in their reports that demand remains elevated, much stronger than 2019 if you go back 2 years. So Wayfair just basically not getting any love. Everybody thinks it's peak earnings. Still trading at 74 times forward, though. So still very expensive here. But we'll see. Will another beat give these shares some momentum to finally bust out to yet another new high? We will see. Then we're going to switch over to what was supposed to be one of the pandemic winners and is in Booking Holdings, ticker BKNG. Now, I own this in my own personal portfolio. And the shares did bust out to new 5-year highs here in late 2021. But Now concerns are happening when we've had the Delta variant outbreaks. So booking isn't just North American business. It is big in both Asia, and Europe is one of its largest markets. Now, most of European travel has reopened, but the business travelers still are not traveling. So what is really happening behind the scenes and travel? This one's going to be definitely one of the big global online travel companies to watch. It's not cheap here. It's trading at 57 times. So, like a lot of these other growth pandemic winner plays, it's very expensive here, even at this level. So, what is happening with the earnings? Are we still going to see the big earnings growth that is expected to come on the reopen? I don't know, but this is one to watch. And then we're going to wrap it up with one of the exercise companies, Planet Fitness, ticker PLNT. So the chart kind of tells it all. It was one of my favorite charts into the pandemic. And why not? Look at what the shares did. They went from 20 all the way up to almost 90 here right before the pandemic hit. And then we've seen all these red arrows. So they haven't been able to beat the analyst estimates yet. Probably because even though we were supposed to be reopening, so everybody's going back to the gyms, we had things like the Delta variant outbreak in numerous states. That's going to cause some people maybe to remain back, still working out at home or outside or those kinds of things. So this is going to be an interesting one to watch here as we go into 2022. It should be getting better, right? But it could take some time for those earnings to really get back where they are. It's trading at 108 times forward earnings here. So this one is definitely not cheap, almost as expensive as Wingstop. But all these pandemic kind of winners are still kind of holding on the highs. They haven't broken down. So that's something to watch for this earnings season. So the recovery isn't as straight and up as we thought, right? We are getting some more of these coronavirus outbreaks. So that's impacting states and countries differently around the globe. So we're having a little bit longer time period to get back to the recovery. And these stocks are reflecting it. But we're getting 1,500 stocks this week, and a lot of them will reflect it too. So be sure to follow me on Twitter to get more earnings charts like this. And you can also get all of the videos on zacks.com/YouTube, but get us somewhere, and I'll see you again next time with some more earnings charts.